Yes, we are live, guys. Welcome back to Crypto Cito. Today, I have the man himself with me, Yuri from DeFi Times. You've seen him before. We made a Lisbon episode. Today, we are in beautiful Lisbon again because we live here.
So, yeah. That's not a green screen.
That's not a green screen, guys. Yeah. So first things first, man. How's everything going? How's life? How's crypto?
Yeah, first of all, thanks for having me again. It's always a pleasure to be a part of your videos. And yeah, Lisbon is doing great. I mean, look at the weather.
Could be worse.
It could be worse. Yeah, but I also think that the crypto market is in a very interesting or exciting situation right now. We see prices recover very well, and there's one thing that makes me so happy. We had so many interview partners recently, and if you talk to them, nobody's talking about charts and prices. Nobody. They just talk about fundamentals, and they say, hey, so many things are going on right now, and everything is developing so fast, and they are so happy that the progress is taking place. And yeah, there are still so many upgrades and updates around the corner, and mainnet launches, so I'm super excited, and yeah.
I think that's a very good point, because I think a lot of people in like retailers that have like jobs that are not in crypto, full-time jobs and responsibilities, families that don't have the time like us to like read crypto.
We also
Twitter.
have responsibilities, by the way. I also have to pay my rent, sir.
Yeah, but not for other people. But I mean, like people that don't have the time and energy or interest to be like 24/7 on crypto Twitter, reading white papers, talking to project founders. I think that's a value that we can also bring, because we are full-time in the industry, and it's not easy, right? It's very volatile, up and down, not just the prices, but also like the whole regulation, right? Every day you hear something new. But the point is like, what you said is so powerful, because he talks to people every single day on their channel. Go over DeFi Times on their website, follow them on Twitter. They are pushing out a lot of content, also interviews with industry leaders who have been in it for years, right? Also hedge funds, like across the board, VCs, project founders, community members, everything that you can imagine. And like he was saying, they're not talk about the price, they talk about products, they talk about building, they talk about the technology, right? And that's eventually what all this is. Crypto is eventually just lines of code. It's not something magic, it's just lines of code written by human beings. And if you surround yourself with those people for long enough, then you figure out that this industry is the fastest growing under the sun. It's only growing up to the right. Sure, the prices are volatile along the way, but the fundamentals are just growing and exploding. But anyway, so today I thought we'll bring Yuri on to share something, because obviously DeFi Times, he's the co-founder of that, so they know everything about DeFi, to talk about institutional DeFi. So can you maybe first clarify what institutional DeFi stands for, what it is? Like,
sure.
What should somebody imagine when they hear institutional DeFi?
So many people claim that this is a repetitive term. They say that DeFi should be open for everyone, and that we actually want to get rid of institutions. But my point here is that DeFi is literally for everyone, also for institutions and for companies. The thing is that institutions and companies have different needs. They demand other services. So if they want to earn a yield on like lending pools on, let's say, Aave or Compound, it's not that easy for them to do this, because they have restrictions by the SEC, for example, in the US. So they can't just go and say, hey, we deposit like DAI on Aave, and the CEO has the MetaMask password somewhere, and we don't know where it is. So they have to do it differently. And that said, Aave bootstrapped this whole development very recently. They launched Aave Pro. And Aave Pro means that there are KYC pools, so that you know who is participating in this pool. So it's not like all the random pools on Aave like nowadays, where you don't know who is participating in this pool. So KYC is essential for institutions to join DeFi. And the cool thing is that an institution is not interested in risks. So
yeah,
they just want to earn a proper yield, and if they can make a good yield, like let's say 2%, 3%, or 4% on a stable coin on an Aave money market that is KYC'd, they are listening to this. And Aave launched this, and there are many other protocols around the corner who do this. So what institutional DeFi basically is that institutions have different needs, and they start to dive deeper into DeFi, and because they have different restrictions than normal retailers.
Yeah, that's a great point. I think the the big learning also from crypto, or the big thing that crypto revolutionizes, is also that it breaks up business models of large tech giants and companies and banks and financial institutions, right? And it breaks that up and opens that up for everyone, literally everyone. So that means for institutions, even hedge funds, family offices, whatever, they also want to cut out middlemen, right? Because they want to put their money to work for them as well, but they don't want to have counterparty risk or many middlemen in between. So DeFi actually cuts out those middlemen, so that for institutions, it replaces the counterparty risk with code risk, right? So that's another form of risk, but if they do their proper due diligence, analyze the code, maybe it has multiple audits, right? Like we're seeing now more and more and more, especially with the recent Torchain hack and all those kind of things, then institutions can actually have more security while also having more profits, right? Eventually. So that's, I think, the big revolution here. I think, like what you're saying, it comes also with other challenges that need to be implemented, right? For example, custodian things and solutions that need to be tailored for institutions, but also the regulation. I think that's why we're not seeing like the mass adoption from day one, because Aave is there, Compound is there, Osmosis is there, right? But they're not going to just, like you're saying, that like install Kepler and run Osmosis, and that's now their business model. It comes also with regulation and new regulatory frameworks that need to be defined first of all, right? Because they have to play by the books. It is what it is, and I think in the long run, it definitely has potential. But so you're pretty deep into the Ethereum ecosystem, obviously. You talk a lot about Aave and Uniswap and Compound, Synthetix, right? Which are the DeFi blue chips. I think you call them the big five. But where do you see this in the long term? And I think, well, we also jointly launched This Week in Cosmos, which focuses on the interoperability aspect. So how do you envision this multi-chain future, and in the future also for institutions, how they could benefit from all that?
Yeah, just quote Michael Anderson here. He is the co-founder of Framework Ventures, and we had him on the show recently, and he said DeFi is taking place everywhere, like on Solana, on Cosmos, literally everywhere. And if you look at these guys, what they do, they also invest in other parts of the industry. So Grayscale, for example, is not only invested in Aave or ETH, they also invested in Polkadot. And the same thing with Framework Ventures. They are also invested in Kava, and Kava is using the Cosmos SDK. So really, DeFi is taking place everywhere, and also Solana grabbed some institutional attention recently. So everything will somehow play out. I'm convinced of that. Of course, not every project will succeed. Maybe not every blockchain will succeed, but I'm very confident that most of these, all these blue chips, at least I think they have a very, 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 very high chance to survive and to become big in the next few years. And what I want to add here is a very interesting concept, maybe to give you a better understanding of institutional DeFi. Institutional DeFi is also for normal retailers, because just imagine it like this. The most people, they do not want to have the responsibilities to have their keys, their private keys. So just imagine this: you have like all your wealth, and this wealth is also there to send your children to school, etc. Do you really want that to have like these 24 words under your bed? No, you don't. You don't want.
You at least want to blame somebody else if you mess it up.
So first of all, there's like custody services which are emerging, and the second thing is that Crescofin. I think Crescofin is a project. We had their CEO and CTO on our show also recently. They have very interesting concepts. So they are minting your US dollars and putting them into money markets on Aave, and your deposits are insured by the Lloyd's insurance market in London. So this is like kind of a merge. We see how DeFi and CeFi is merging, and now the average Joe can go to a service like Crescofin and say, hey, now I can earn like my 4 or 5% on my assets again, which is completely mad. If you consider going to the bank and say, hey, I want to have like 4 or 5% on my euros, they would say like, hey, good morning, are you still stupid? So this is what we see. Institutional DeFi is crypto mass adoption behind the curtain, because now everyone can make a good yield on their assets again. That's the first thing. And yeah, the other thing is that's also like a security question, and yeah, we definitely see how these worlds are
come
merging.
together, yeah, I agree. And I think there's still challenges along the way, definitely, but we're getting there. So it's all just a matter of time, I think. And like you were saying, I think most people don't really care about full decentralization and holding self-custody. I think they care more about having the least efforts to get a better deal, right? In the end of the day, that's what it is. So they're fine to give away, because we're also used to this, right? We're not used to have our own data. If you have a Facebook account, you gave away for free your data to Facebook, right?
Yeah.
WhatsApp. And that's so embedded in our society, in our economy. That's why I think, yes, I love decentralization, but we also have to be a bit realistic here that it's going to be a middle solution in the end of the day, right? There's going to be products that merge both worlds. Personally, I think I have more than 90% of my coins in self-custody. I still have some coins on exchanges, but I also want to get it off, because I know, they have good products, good yields that you can stake easily. Right now, the user experience on centralized exchanges is still better than most decentralized wallets or non-custodial wallets. But I think as these products emerge and people understand the difference between holding custody and not holding custody of your own funds, I think that's the time where people have a choice.
Yeah.
And I think my prediction is that most people are going to choose to give away their ownership, right?
Yeah.
Because they're used to that.
Not only that, it's also more secure, and they want to have somehow the certainty, and that's the thing. But this will drive mass adoption, and here we're again, and that's my take on institutional DeFi. Pay attention to institutional DeFi, because institutional DeFi is crypto mass adoption behind the curtain, because most likely most people will use DeFi services every day without even recognizing it. They will just think, hey, I'm at my bank account, and all of a sudden the interest rates are higher. I don't know, maybe the central banks did something. No. It's just because they use DeFi as a backbone. So DeFi will become the backbone of tomorrow's financial system. And a very good example for this is ING. A very good friend of us, Xavier, he used to write the white paper for ING about DeFi, why DeFi will disrupt banks more than Bitcoin. And he's totally right. And he also pushed this narrative in the right direction. So yeah, there are so many interesting things that take place. So institutional DeFi is definitely here to stay and will drive mass adoption.
So to wrap things off, what is your final? What is the top 3 tokens or coins to watch that are institutional DeFi candidates?
So of course, there's no financial advice, but first of all, Aave for sure.
Aave, yes.
Because most institutions use Aave. ENG made its research on Aave, and Aave is also a pick from Grayscale, so this would be my first pick. The other ones, I would say Uni for sure, because Uni is basically the heart of DeFi, and I mean, to be honest, they are most interested now in the Ethereum ecosystem, so maybe YFI and Maker. And apart from that, I know Kava is also very, so from the Cosmos ecosystem, many institutions also have an eye on Kava, but we will see more of this in the future. But from the big coins, Solana and Polkadot.
So Aave, Uniswap, Unitoken, and Kava, and then layer 1 solutions. So those are layer 2 solutions, or dApps, not layer 2, but dApps. And then on layer 1 you have Solana and Polkadot. Besides Ethereum and Cosmos. All right, guys, thanks for tuning in. Stay safe, guys. Be good out there. Don't be too tribal about your coins that you're holding. This space is so early. DeFi literally became a term just 1 year and a couple of months ago, and now we're already talking about the future is going to be institutional DeFi. You see how things evolve, how fast they are. This is again the fastest growing asset class under the sun. Stay subscribed. Also check out DeFi Times on Twitter, on YouTube. They have their own YouTube channel as well. Published a lot of interviews and great content, and also their newsletter and a podcast. That's all you can do. I mean, there's
and
literally
website.
not more you can do, and a website, yeah. So they are running everything. Thanks, Yuri, for coming. Now we'll get a beer.
Yeah, we'll definitely get a beer. And
some dinner.
thanks again for having me.
Sure, bro. Thanks.